Hey, welcome everybody. It's Walter here from FX Jake, and I see a lot of familiar faces here, a lot of familiar emails, I should say. Well, as you know, we've got Roberto here, and many of you don't know the story about how I came upon Roberto and how many of you met Roberto was through the Naked Forex Now forum. And Roberto was originally on the Naked Forex Now forum, and he was posting some really great trades. If you look up Forex Boy, you'll see his stuff. And he had quite more than a few people interested in what he was doing, and it was really great because let's see here. Let me find Forex Boy. Oh, I've got to log in, right? Okay. But you can go look at it. You can go find him later. The point is, Roberto has a trading room, which is at theforexcircle.com, theforexcircle.com, and we have lots of traders here from the Forex Circle with Roberto. And I just wanted to read some of the emails that I've received from people who have been in the trading room the last couple months. And all of you, actually, everybody here is invited to the trading room next week. So everyone here, if you want to see this for yourself, that's what we're here for, is to offer that to you. Lisa emailed me and said, I wanted to let you know I made a lot of pips on the yen crosses this AM. I was in early, but I didn't take profit on the retrace, and I held my positions. I exited them all now with approximately 138 pips. I feel a little sick over leveraging the account, but I believed in what I was seeing, and I went for it. The small losses are my indecisiveness, but I pulled it together and got a great day out of Monday. Thanks, Roberto. Jeff said, I have attached... This is Jeff in New South Wales, in Australia. Jeff says, I have attached yesterday's trades to show you how we are doing in the trading room. These are the trades I took. There may have been others as well. To be honest, the pips are good, but it's the learning how to trade for yourself that I am finding extremely beneficial, and all of the other little idiosyncrasies that the market has. Regards, Jeff Brown. Here's Emmanuel Plomidis, and he's also in the trading room. He says, since being introduced to Roberto, my account is in profit for the first time. Hold on a second, guys. I just want to make sure. Sorry, guys. I need to start the recording here. Sorry about that. So many of the people that are in Roberto's trading room have sent me these testimonials, and it's just great to hear these people doing so well. Emmanuel Plomidis says, since being introduced to Roberto, my account is in profit for the first time. He is an excellent teacher and mentor. The knowledge and information is transferred live and in an easier format to understand. He demystifies the world of Forex. Thank you, Roberto, for your unselfish wisdom. Jim Hendricks says, thanks for this. I appreciate the many hours you spend with us online, Roberto. It's really helpful to actually hear how you are analyzing the trade setups in real time, prospectively, rather than looking at the charts retrospectively. Although I've only been listening to you for a couple of weeks, it has been extremely helpful. I've enjoyed your didactic style and the way you engage the attendees from all over the world. Being a member of Walter's Daily Trader along with the Forex Circle has allowed me to learn from different styles of trading. Thanks again, Jim Hendricks. Also, I have, I mean, there's, I have many more, but basically, let's just see if I can find another one here. Stephen Wainwright says, I've been with Roberto for 4 to 5 months, but I've been researching him for 3 years and finally realized with all my research in the Forex industry, this guy was the real deal, and he has been in the industry for 12 years plus. This was the biggest reason for me to come on board to advance my trading techniques. To date, I have advanced my knowledge immensely and still learning. There is a lot to learn. In my opinion, you must listen and observe until it sinks in sometimes. It's a lot to take in, but with his trading room, it's like being one-on-one, and you can ask him as many questions or send him an email, and he will always get back to you. He will always go over your trades with you and analyze them to help you along the way. Should I have joined sooner? Absolutely. It should have been sooner rather than later. Thanks, Roberto. Sincerely, Steve Wainwright. So there are lots of people that are happy with what's going on in the trading room, and I'm glad that Roberto's here to show us what he does on Fridays, how he trades Fridays, and also everyone here again is invited to go to the trading room next week, all next week, and I know Dom says Jimi Hendrix. I know I was laughing at that too, that there was a Jimi Hendrix in there. And so basically he's doing really well in the trading room, and everyone's really happy with it. It's well worth it. And so basically what I want to do is invite everyone here 7 a.m. and 7 p.m. all next week, New York time. If you don't know what your time is compared to New York time, you can go to timeanddate.com and check it out and see what time and date. There it is. Yeah, you can go to time and date. Oops, and there you go. Yeah, there it is. Well used website. And compare 7 a.m. New York time to your local time and 7 p.m. So you know that he's basically trading the New York session and the Asian sessions, and he has systems for both, and you will learn those in the trading room. So everyone here is invited to that next week. Next week is going to be an open house for the trading room. So without going on and on here, I know that you're here to hear from Roberto, so let me go ahead and unmute you. So Roberto, can you hear? Yep.
Yeah, I can.
Excellent. Okay, I'm going to give you control here, and we'll let you take over. Go for it.
Okay. Welcome, traders. Thanks for attending this webinar. And I'm so glad Jimi Hendrix is alive because I was such a big fan. But so here, can everyone see the screen, or my screen? Just want to make sure that everyone can hear me and can see the screen, because this is what you will see when you come into the trade room every day. On the left-hand side, there's a notepad with the date, trade hours, and any trades. For example, any alerts. Today we're going to be trading a news event that's coming out at 8:30, and it's Canadian retail sales and Canadian CPI, and it starts at 8:30. So we'll trade that. What you see here are all the yen pairs, and what some of the trades that we took going into the Asian session, the beginning of Friday. So these are the amount of pips that it went up. It's not the amount of pips that I actually made on these. I captured a small portion on each one of these. The surprise was the Australian dollar. There was positive news out of Australia that China's economic slowdown, or the China economy the slowdown has stopped, so it sent the Australian dollar up, which is great. So if you look at, for example, Aussie dollar, it had sold off, and then here's the retracement for Friday. And here is Australian dollar. Oops, I clicked out. Let me just, by mistake, I clicked out of it. So just let's look at Australian dollar really quick. Or rather, Australian yen, not Australian dollar. Here's the sell-off. The market had been selling off. Here's Tuesday, Wednesday, Thursday, and Forex Friday. See, the market just shot up over 85, 90 pips. So that was that trade. So Forex Friday is just a very simple retracement pattern that happens. It's a phenomenon that occurs when the market has been trending in one direction all week, and then it just retraces on Friday. And how I came across this is just looking at several pairs for over a year, and just seeing consistent turnarounds on Friday. And it would just be logical that if the market had been going in one direction all week, then Friday is a profit-taking day, and that would cause the market to reverse. And that's exactly what happened on many of these pairs. Especially, I liked doing it on the yen pairs, because it's Asian session is when you trade the yen pairs, and it's the beginning of Friday. So oftentimes the market will start retracing before any other pairs retrace. Okay. And essentially that's it. It's just an easy trade setup, and you don't have to worry about when to get in, because I will tell you when that will occur. We use certain methodologies. We use a 1-hour scalp system, a color change candle. We use swing points, break of swing points to enter trades, candlestick, any other candlestick patterns like a hammer, a kangaroo tail, time to mark trend lines if they're broken, anything that can indicate, any methodology, any strategy to indicate the market's finished, going in one direction, it's ready to turn around. Okay, basically that's it. And then we start looking for entries on Sunday to Monday. For example, if the market did not retrace on Friday, then we start looking for Sunday to Monday retracement. So that's the other strategy. Oftentimes the market will not do that, will not, depending on the currency pair, will not retrace on Friday. And then we start looking from Sunday to Monday. Okay. Now I'm just going to pull up the pound yen, because this is one of the best trade setups. And this was very clean. There was a lot of clarity on this trade. Notice from Tuesday to Friday, the market just sold off, and then on Friday New York session, it retraced 209 pips. Okay, so I look for these. Actually, this was an ideal setup. You're not going to have this every week, but when the market consistently goes in a downtrend or goes in an uptrend from Tuesday to Friday, then almost to a certainty it will retrace substantially. Now I'm going to show you a really neat thing. Here's the high on Tuesday, and here's the low on Friday, and look where the market stalled out, at 61% retracement level. So we also will be using Fibonacci tool for our exits, and also to re-enter the market in the direction of the trend, which is on this pair, on pound yen, and all the yen crosses, the direction was bearish all week. The 4-hour and the daily chart indicated that the market was trending lower. Okay, so essentially that's it. Does anyone have any questions on that? Let me just stop right now. Any questions on anything I said? We're going to see if we can place any trades today, but I just wanted to make sure that everyone understood the Forex Friday phenomenon before I go on.
Tony says it's clear, and Mike says it's clear. I have a question. So what happens if, like, the week is just choppy, like sort of day up, day down? Would you just stay away from that pair on Friday for Forex Friday, or what would are you generally just looking for a sort of a trending pair, or how is that?
That's a great question. Generally, that's why I mentioned that when we were looking at the pound yen, and there's such clarity on this trade that the market was just clearly selling off all week, then there's profit taking on Friday, and that's why this move took place. Yes, if the markets are choppy, I generally stay away from that pair. I look for another pair to trade, because there's no direction. No one is in control all week, so we don't know if there's going to be a retracement. There's no retracement to be had, because the market is not oversold or overbought. It's not exhausted, and we're looking for exhaustion. And generally, why, in my thinking, and after looking at so many pairs over a year, is why would anyone be wanting to sell at the bottom? The market has been trending all week. Why would anybody sell down here? That was my question. And I thought, well, no one would want to be in their right mind be selling down at these levels. The market is completely exhausted. There's an imbalance of buyers and sellers, and there's a lot of demand to sell, but there are no sellers. So everyone starts, well, not everyone, but many day traders, they start exiting their positions, causing the market to retrace, and then the bulls see that and they hop on, push the price even higher. That's my understanding, and that's what I've seen over a whole year of looking at several pairs. So what I've done is in the trade room, I've told everyone, look, open up a demo account and just buy all the yen pairs, and just get out at the end of Friday afternoon or Sunday and see where you are, just so you can remove the doubt that this trade actually works. Okay, so I did my own little Forex demo, and I'll show you here. Here are the pips. You can see the pips on the right hand side. So far we have 51 pips. What is that? Let me see, 122. Yeah, we have 51 pips, 20 pips, 27 pips, 39 pips right here on the right hand side. I took all 4 yen crosses, and it's still early in the day. The market is not over yet. Okay, so there's still a lot of, especially on Australian dollar, it's taking off. It's not, doesn't look like it's going to be retracing anytime soon. Okay, and we're also going to be trading in about an hour from now. We're going to be trading a news event. So what I normally do at 7 a.m. is that I will do analysis, maybe a short workshop, and then we take a break and come back for either a news event or the opening of the New York session. So there's going to be a lot of gaps in the trade room. I'm not going to be on for 3 hours trading, because I trade off the 1 hour chart. Generally what I do is I come back at the top of the hour to see if there's a trade set up. So at 7 a.m. you come into the room, you look on the left hand side, you see the trade room hours, notepad, see if we have any trades, if we have any news events. Please, you have to mute your mic to make sure we don't hear any background noises. And then we start trading. If there is a trade at 7 a.m. then we'll take it. If not, then we come back for the New York session. And then we end the session sometimes before 10 p.m. if we are in profit. Or if we're in a trade, then we'll just put a stop loss and the trade room will close, and we just ask you to manage that trade. And then we come back at 7 p.m. for the Asian session and just start all over again. And oftentimes the market will take off around that period of time for a short gain. As it did, the market, I'll give you an example of what happened on the pound yen. Here's when we opened the trade room and the market just spiked up 100 pips, and then it retraced, and then sometime during the London session it just shot back up again. Okay, so there's always going to be, not always, but oftentimes there's a trade right when we open the trade room. And if not, we wait till 10 o'clock because we have another strategy called the 10 o'clock retracement on the yen pairs. So there's about 5 or 6 different trade strategies that I have and weapons that we use. And you learn how to trade these. It's not that I call out the signals and you don't understand them. We go over the trades. We have a workshop. After a while, you'll understand the methodology. You'll understand how we trade. And so when we call out the signal, you'll have confidence. You'll see the trade set up. You'll understand why, and you make money on that trade. Okay. Any other questions?
So
Aussie dollar and Aussie yen is a buy. So this is going to continue going north. So if I'm going to enter these trades as soon as there's a retracement. Don't want to get in at these price levels right now. But as soon as there's a retracement, I'm definitely going to be buying Aussie dollar and Aussie yen. So guys, look out for those, okay? Okay, go ahead.
Okay, we have questions here, Roberto. Is it always the, Francisco says, is it always the 1 hour time frame, always?
No. I trade off the 1 hour chart, but we trade daily charts. For example, we traded the Euro CAD yesterday. I sent out a signal to sell the Euro CAD pair. So on the daily chart, this is what I was seeing was a false break right here. Let me just make this bigger. We trade off of all time frames. Just the 1 hour chart we use, there's certain techniques that we use on the 1 hour chart. So here was the false break. and then we enter the trade here at 135, and it went down about 113 pips. I had a trailing stop and got out about 85 pips. So we trade off of all time frames, as yet the core of my strategies is the 1 hour chart. So you learn to become a scalper, a swing trader. You learn to trade off the daily charts. You learn to trade off the 4 hour chart. You learn to trade off the 1 hour chart. So when you're waiting for a setup on the daily chart, we're scalping. Okay, so, and when we're scalping, we're just waiting for a setup on the daily chart. So I don't want to be a one-dimensional trader where I'm just trading off the daily chart or I'm just scalping. So we're looking at all time frames, and also when we have time frames like the 1 hour, 4 hour, and daily chart all lining up, then we start looking to stay in those trades longer. And that's what happened with the yen crosses when the time frames, daily, 4 hour, 1 hour chart, all in a downtrend, then we just sell. All week. We exit positions, but we look to re-enter, or I start looking for strategies to stay in longer. But our main strategy is the 1 hour scalp system.
Excellent. Okay.
Any other questions?
Yes. Santosh says, in Notepad, you mentioned buy percentage and sell percentage. What do they indicate? Buy and sell pair or both?
No, this is these are the numbers that will be coming out in an hour from now, and retail sales. I should just pull up. All you need to do is go to Forex Friday, Forex Factory, and pull up the calendar, and you will see that. And I'm pulling it up, so just give me a second, so I can show you. It'll be better than just explaining it. We do trade the news. Okay, and there's a specific way of trading it. 8:30, these are the core CPI and core retail sales numbers. Now, we need a certain number for us to be able to take the trade. If that number does not appear, then we don't take the trade. So these numbers refer to, if the numbers come out at 0.6, we're going to be buying Canadian dollar. However, if it's minus 0.4%, then we're going to be selling. And then there's another release. So if both these numbers, if it hits the deviation, it's called 0.5%, we're buying Canadian dollar and selling. And I will guide you through this. You don't really even have to understand this, because the numbers are going to appear at 8:30, and then we decide how to trade this. And we have a certain technique on how to trade the news. We wait for initial spike, a retracement, and then we take the trade. Usually when these numbers are met, then the market does move. Okay, it's when we don't get a surprise number, very positive or very negative number, is that we stay out of the markets. We don't trade it. Okay, so you don't really have to understand these numbers. I will go over them in a workshop sometime, but right now, just to know that if these numbers are hit, if we get these numbers when the news comes out, then yes, it's going to be a tradable release. Okay.
Excellent. Okay.
So we trade news events. Go ahead.
Oh, yeah. Well, Rashida was just wondering if you use DeMark, because the indicators are right on your chart.
I use time to mark trend lines. I use price action. The core of the strategies is price action. And yes, time to mark trend lines are used. And support and resistance, we have a color change candle technique. So we have many weapons. We have many ways to analyze the markets to take trades. Okay. And I like the time to mark trend lines because visually I can tell when the market has broken a resistance or support, and it's easier to take a trade that way. Great example is here. I mean, boy, I keep on doing this, I'm sorry, but we had on Aussie dollar, here was a trend line broken on time to mark, and then we enter on the next candle, and you would be up, and this is a target on the 1 hour chart. However, if you see this on the 4 hour chart, then it's just breaking a trend line, and we enter here, and then we're looking for exits up here. Okay, so depending on the time frame we're looking at, entry points and targets are different. Okay, and right now, Aussie yen and Aussie dollar probably just keep going up for the rest of the day.
Okay.
And notice that the pound yen has recovered and starting to head north again. So it's continuing its upward trend from the Asian session. Okay, go ahead.
Okay, there are lots of questions here. Okay, here's a great question about the entries and when you're using the Forex Friday strategy. I believe David's talking about the Forex Friday strategy. He says, so does the stop go below or above the weekly high or low, or what's the deal on that?
Great. Okay, let's do several trade setups. Here we go. We also have this color. See these areas, these colors, this green and blue? It's a template, and you'll receive it when you join. It's telling us these are a supply and demand indicator, telling us there's a lot of demand to sell, but there's no supply, and this is a support level. So we start looking for levels like this to enter a trade. We also look for a color change candle. We look for also these candles down here. Look at all these wicks. So yes, the stop loss would need to be below the swing point of Thursday. Generally, it's the swing point of Thursday's low, which is exactly the weekly low. And then we do, for entries, we look for a color change candle. For example, on this trade, we had, let's see, 1, 2 red candles followed by a green candle, which is our alert, and then we trade 8 pips above this candle. Let me just make it bigger so you can see it better. So this is a technique that I use. Here's the entry here. Stop loss is below there, and the market just shot up from there about 100 pips. So we use several techniques. We also use time to mark trend lines. So it doesn't appear on this chart, but I would have used this trend line and a break of the trend line plus the color change candle plus the fact that it just would not penetrate these levels just told me that the market was finished. It's exhausted. It doesn't want to go any lower. And then we'll look at different time frames. We look at the 4-hour chart and notice that yes, we have a lot of resistance, or rather a lot of support levels here. We have inside bar. We have all these wicks telling us that the market is not interested in printing any lower. So we start looking, and it is Forex Friday, so we start looking for entries to buy. So there are many different types of techniques that we use to qualify a trade. It's just not, okay, it's Forex Friday, I'm just going to buy or sell. Okay, we just make sure that we qualify the trades. All right.
Okay, excellent.
Any more questions?
Yeah, FX Greek says market exhaustion is only relevant to the news. Sounds like
well,
a question.
Yeah, that may be true. Okay, but Forex Friday is real, and I've been doing it for a year, and you may get 50 pips or 40 pips, regardless whether it has anything to do with the news. We trade price action, so you don't even have to know anything about Forex Friday or exhaustion. We trade price action. So we don't trade what we think, we trade what we see. and everyone understands that. When we look at a setup, for example, on Australian dollar, there was a news event that pushed price higher, but price was exhausted. It hit a previous support level from February the 8th. There was also a false break, and there was an entry down here. So we don't rely on one specific thing to enter a trade, and that's so essential when you trade Forex. Okay, because you cannot, there's too many different countries, too many different economies, and it's very difficult to know exactly what's going to happen unless you're a very good fundamental trader. So I rely on price action and all these little tools, and also past behavior in the markets, certain patterns. Remember, we're not looking for long-term direction. We're just interested in capturing a small amount of pips on a day-to-day basis, and these techniques are very, very, very good at predicting the market direction. Okay. I hope that helps. I don't know if I answered your question, but yes, you are right, FX Greek. I mean, that is true, but also Forex Friday is a very, very real strategy that I use, and as you can see, the markets on all yen pairs all reversed. They all retraced.
Okay, and we've got, right, so I think I answered this, but Chris Jones was wondering if, all the trades are recorded from a point of view of learning of what went on in the session. And I think that's true, right? Most of the sessions are recorded and posted in the members area. Is that right?
They are. Well, what I've been doing lately is just recording the essential aspect of that trade room, because oftentimes we're just sitting there just waiting for a trade. So I'll turn off the recorder or just record the workshop segment of that trade, or when we're actually taking a trade. Because when I first started recording, I noticed that there were 3 hours of recording, and maybe only 20 minutes of that was valuable. So I had to stop recording the whole session, and just what I like to do is usually start with an analysis, and I'll record that. And then I get questions, and it's great, because then I can talk about more about strategies, idiosyncrasies in the market, personalities of different currency pairs, correlated pairs is one of the things we do when we see, for example, the yen crosses. We buy all the yen crosses if they all go up or all go down. There's strength in that. If we see correlated pairs that are not in sync, then generally I'll stay away from that trade. For example, if you have the Australian dollar going up but the pound yen is going down, that's not really yen weakness. That's across the board. That's just one currency and one country doing better than the other. So I tend to shy away from those type of trades. But when you see the yen crosses all take off in one direction like they all did last week, and they were all bearish, then it's very easy to take that trade.
Excellent. Okay, so there's another question here from Anum. Anum P is asking about the win-loss ratio.
Good question. Because we're looking at trade setups, or rather because we're trading so much, and oftentimes we can take as much as 20 trades a day. I'm not really concerned about our risk-reward ratio, because oftentimes we're taking very short trades, 10 or 20 pips off of each trade. We're targeting about 100 pips a day. So, for example, Aussie dollar, if we took this trade, then we don't have any choice but to put our stop loss below the swing low. So if we entered a trade here, then our stop loss was about 50 pips, and the market's already gone up 72 pips. It just depends on the pair. Sometimes I will not enter a trade because the risk reward is not that great. But because we're looking at so many different pairs, there's always going to be a trade. So the risk reward, usually 1-to-1, 1-to-2, just depends. And oftentimes I'm exiting that trade even before the target is met because I'm trading so much or I'll see another trade set up. So it's about 1-to-1 or 1-to-2. It all depends. It's and you'll see if you join the trade room, we don't break rules, but we kind of bend them a little bit. We're not one-dimensional traders that we just trade only if we see one thing and nothing else. The markets are so dynamic. There are so many different ways to trade. There's 100 different ways to trade. And what we do is try to find every little nuance in the markets. We see if there's a retracement at 10 o'clock p.m. Eastern, and maybe we'll just take 20 pips off of that trade. It'll be a 1-to-1 ratio. But always the stop losses are below or above swing points of the 1-hour chart. Okay. Hope that helps. It's a different way of trading. It's not set and forget sometimes. Some of them are, but it's very dynamic. We're in and out oftentimes. We're looking at several pairs. So I don't even think about risk reward because I'm just counting pips and I know that's not something you should do, but I'm looking, okay, I see a trade set up. I see a color change candle. Let's take that trade. Let's target about 20 pips and move on to the next trade. And by the end of the day, we should be able to capture at least 100 pips, and that's the goal of trading in the trade room. Okay, go ahead.
David M. says that the Euro-US dollar made a weekly low about an hour ago. Would you now look to go for a potential long? Great question, David.
Let's look at it. Okay. So we're going to qualify this trade, okay? Market's been trending down all week. It's exhausted. It's hitting a support level, but it's not finished yet, and it's broken the time-to-mark trend line, and I wouldn't be entering a trade at these levels because we're in a downtrend. And remember, if we don't find a retracement, and I think I said this in the beginning, if we don't see a Forex Friday on Friday, then we start looking for Sunday to Monday's retracement. So if the euro dollar continues to sell off down to here, then we're going to be looking for a retracement from Sunday to Monday. Okay. So here's Wednesday, here's Thursday, here's Friday. The market did a small retracement during the Asian session, about 58 pips. And generally that happens often during the Asian session, that the market will retrace and then continue its downtrend. But if we don't have a retracement during the New York session, which will be open, in an hour from now, then we're definitely going to be looking for Sunday to Monday's retracement. Okay. How's that? Does that make sense? It's just right now it's bouncing off the swing points. We don't know. This huge candle certainly indicates that the market is going to continue to go south. Okay, but we don't know. Okay, it just may stall out at these levels and turn around and go north. But this is the time-to-mark trend line. Currently, we're in a downtrend, but I don't have anything to tell me that the market is going to be turning around here. Let's look at the 4-hour chart. Okay, very strong retracement. We're still in a downtrend. And on the 4-hour chart, for one thing, we would have to break that swing point for Forex Friday to go into effect. So no, there's no retracement on this pair now. Okay, so I wouldn't even touch this, and until I see a strong support or a surge, you'll see the market take off, and then maybe yes, I would take that trade. But if we look at this pair, it put in 534 pips all week. It's exhausted. It's due for a retracement. Okay? And we use price action techniques for our entries. Okay? We just don't take the trade because we think it's going to turn around. We need confirmation that this is over. And and it's going to go back up. Now, if it does go back up, what I do, assuming that this is the swing low, I draw a fib from the swing high to the swing low, and this would be our targets, 38, 50% retracement level, and I would take this trade going north. These would be the levels that I would be exiting the trade, because we're in a downtrend on the 4-hour. We're in a downtrend on the daily chart. Notice the downtrend on the daily chart. Okay, so it would not be wise to go against the ebb and flow of the market right now. Yes, there is Forex Friday retracement, but right now there's no indication that this thing is going to turn around until probably it gets down to these levels, 130.56. Okay. So I love doing the top-down analysis, is called, when you look at a daily chart and the market finally turned around here. We have these swing points that were broken. So for the past, since the 5th of February, the market was in a down, well, was it the 5th of February? It's actually here, which was the 8th of February. The market was in a downtrend in euro dollar. And this is a nice, beautiful, beautiful head and shoulder pattern on this pair. So I would not be interested in buying the euro dollar based on a few things. Head and shoulder pattern. The market is these huge red candles just going down. There's no chance for buyers to come into the market right now. On the daily chart and on the 4-hour chart, we're still in a downtrend. However, the market can retrace, and we can take advantage of that, but it doesn't look like it wants to retrace right now. So I would definitely stay away from the euro dollar for now. I hope that helped.
Yeah, you know, David says that's great. I just I'm short the euro right now, and so he's really happy to hear that.
Terrific. Yeah, I mean, it's I was actually going to short the euro, but I had all the yen pairs going on, and I thought, oh, I can't take another trade. The euro dollar looks so great. That head and shoulder pattern was perfect. Right.
Do you? Okay, here's one. Frank, I thought Frank was in the trading room. It must be a different Frank. Frank says, "What's your average return with these techniques, Roberto?"
Usually, Forex Friday, I normally capture about 200 pips, at least 200 pips on Fridays. Now, I'm trading several pairs. I'm not just trading one. So I may take 30 or 40 or 50 pips off of each one. If I trade 6 pairs, then I'm up 200 pips. I'm done for Friday, and I turn off my computer. I'm done for the day. If I can make 200 pips on a Forex Friday, oftentimes what I'll do is that if I'm up 40 or 50 pips, I may put a stop loss to capture that much and just leave it for the rest of the day. Like I have pound yen. I'm in pound yen and Aussie yen and Aussie dollar, and here's the trade was taken down here at 141, at 142, and I'm up 70 pips, but I'm not going to exit this trade. I'm staying in this trade, and I have a trailing stop loss in this trade. So this is when you see these surges, and it's great because then you can just stay in the trade. You don't have to exit, and you're still in profit. But if you can maximize your profit if you just trade several pairs, you're up 40, 50 pips on each one. Put a stop loss so you can each at least capture 30 pips. You're still going to be making 100 pips if you have 3 or 4 pairs. And just leave it alone. Just come back later and see. If it hits your trailing stops, fine. Doesn't matter. As long as you've made money and you protect your equity, that's all that matters. Okay, but generally about 200 pips on a Forex Friday, and I'd like to target at least 100 pips a day. Sometimes it's less, sometimes it's a lot more, but it averages out.
We've got lots.
Any other questions?
Yeah,
go ahead.
lots of them.
Oh, okay.
Yeah, there's tons. I mean, we could go all the way up to the news release if you wanted to, but here's
Yeah, no, that's a good idea. We can do that. Well, let's see the news release. I mean, we still have plenty of time.
plenty of
We
time.
can go on for the next 30 minutes.
Yeah, I mean, they're stacking up here, Roberto. Is it your route? So Al says, is it your routine to check your charts at the top of the hour, correct? Is that what you do? And then you go to lower time frames to fine-tune your entries?
I don't go any lower than 1 hour chart. The 1 hour chart is my, giving the example again, okay? These are hour candles. So I would come back at the hourly and I see, oh, I have a color change candle here. We actually had a color change candle here an hour ago. See, there was a color change candle there. And the entry would have been 8 pips above the close of this candle, which would have been, entry would have been 140. So if you didn't enter this trade before, you could have entered it now because we had 2 red candles followed by a color change candle. The entry would have been 142.35, and you would be up 50 pips right now on this trade. So yes, well, it just depends. I'm looking at several different things, and if I don't see a trade set up, then yes, I walk away from the computer, come back at the top of the hour, and see if there's a color change candle, see if price is hitting a support resistance level. Because I trade off the 1 hour chart, I can't make a trade until that hour candle is closed. Okay, I can't decide what to do. I can't know where the market is going until that candle is actually closed. Oftentimes you see the market take off in a direction, and if you hop on that train before that candle closes, it could be disastrous. It could turn around. Give you an example here, okay? A good example where the market completely, here's take the Canadian yen, where you saw the market take off in a direction. See this long candle, this was once a solid candle, and if you would have hopped on this train before this candle closed, look what would have happened, okay? You would be down 40 pips. So I have to make sure the candle closes before I enter a trade. Okay? Okay. Go ahead.
Okay. Yep. Santosh asks this question. Do you place your stop loss immediately in the system, or is it a mental stop loss and applied after a confirming candle or indicator?
First, I do mental stops when I'm trading and I'm in front of the computer. I don't do hard stop losses. If I walk away from the computer, I definitely will put a hard stop loss. And for example, on this trade, this one qualified, and we would have entered a trade above, 8 pips above that, and then when I put a stop loss 10 pips below this red candle, so the stop loss would have been down here. Okay. This is a scalp trade, so we have to have tight stop losses on these trade setups. Okay.
All right.
Now, in general, I like to take the trade in the direction of the trend, and the trend for the pound yen is north right now. So I would not want to be taking sell trades because these swing points are broken. So I'm bullish bias, so I'm looking for trades going north. Okay, go ahead.
Right. That was really interesting what you just said. Maybe you can talk a little bit about why you're saying that because I can just see people saying, what? The pound yen's in an uptrend? But can you talk a little bit about why you're saying that right now? You hinted at it.
Because,
yeah.
Sure. Okay. See these swing points? Swing point. We had lower lows on the one. I'm talking about the 1 hour chart. I'm not talking about the 4 hour and daily chart. The 1 hour chart. We had swing points, right? Here's the swing point. And what are the swing points doing? They're going lower, right? We're in a downtrend, all right? Downtrend. But what happened here? Here's the last swing point. That was what? It was broken. We don't have lower lows and higher lows anymore. We have higher highs and lower highs. So on the 1 hour chart, the market flow is up. Okay, there's a shift. in direction. It is Forex Friday, so I feel comfortable taking a trade going north. But until these swing points are broken to the downside to go in the direction of the 4-hour and daily chart, we're in an uptrend on the 1-hour chart. So I'd be looking to buy on the 1-hour chart. Okay. So these swing points, yes, you'll be selling because we're in a downtrend not only on the 1-hour chart, but also on the 4-hour chart and the daily chart. But on the 1-hour chart, the market flow changed. The swing points were broken, so we would be buying on the 1-hour chart. But we're looking for, first, a Forex Friday retracement, and also we're not interested in staying in these trades for a very long time. Okay, this is a retracement. It's not a reversal, and that's the distinction. As soon as the market turns around and breaks the swing points, then yes, then I would be selling because now the 1-hour chart is going in the direction of the 4-hour and daily chart. Okay, hope that makes sense and helps. It's just being able to capture all these moves, whether the market, oftentimes I don't care what the higher time frames are doing. What I care is about what is the 1-hour chart doing, because this is going to tell me if the market's going to retrace. And I'm not interested in, again, staying in this trade for a very long time. I'm just waiting for a retracement, take profit, waiting for exhaustion, and then waiting to enter in the opposite direction. I'll give you a good example. Let's look at the this is another here. We're in a downtrend, right? This was last week. Downtrend, downtrend, downtrend. Here's Forex Friday. We have a color change candle, an inside bar, okay, and we have a trend line that was broken, and we're in an uptrend, okay. As soon as this, on the 1-hour chart, the swing point was broken, we were in an uptrend. So that's 1 hour, 2 hours, 3 hours, slight retracement, and then continued through Sunday before it hit a 61% retracement level. And now these swing points, this is the last swing point here, it was broken here, so yes, now we're in a downtrend. But until these swing points are breached, the market on the 1-hour chart was still in an uptrend. Does that help? Because this was a good example where the market was selling off all week, and on the daily chart and on 1-hour chart, or rather 4-hour chart, the market flow is down. But this is the 1-hour chart, and look what it did. It put in 200 pips. Okay, that's why I said before is that we not only trade the daily and the 4-hour chart, we trade off the 1-hour chart. And the 1-hour chart can be going against the 4-hour and the daily chart, and we take advantage of that retracement. We don't wait a whole day till the market is exhausted so it can go in the direction of the 4-hour chart. There's only 20 trading days in a week, in a month, and I don't want to be waiting 2 or 3 days or a day before there's a trade set up that is in the direction of the 4-hour and daily chart. There's a lot of trades to be taken in between. Okay. Okay, that's.
Here's an interesting question, Roberto.
Any other questions?
Yeah, this is really interesting. Martin Jones asks, do you find that mediating a trading room sharpens your own skill and allows you to articulate why you take a trade better? We were just sort of talking about this earlier, but yeah.
No, that's it's exactly what we were talking about. I thought the opposite was going to happen. I thought that it would be a distraction, and it actually is not. I tend to focus more and analyze charts and better. And yes, it's actually increased my account because of the trade room. It's enjoyable because everyone is making money, and that's really making me happy. And it's giving me more confidence that these trade setups are real, they work, and just the interaction is really fulfilling. And getting emails, people telling me that their account was never in profit till now, that's precious. That really helps me. So yeah, it really is definitely a good thing.
Yeah, that's great. Yeah, I've been getting a lot of those same emails, but It's interesting, isn't it? Because when you're doing something like this, there's a lot of pressure to only take the very best ones, and sometimes you don't think things out. But when you have other people there, I guess what ends up happening is you actually talk it out, and you might not do that if you're in front of the screen all alone. So it's an interesting dynamic, isn't it? Really, yeah.
It is. It is interesting, and you're absolutely right. When you have people to answer to, so you want to make sure that what you're doing, you want to make sure you cover all bases and analyzing the charts. And the thing is, it's mostly what not to do in trading. There's so many trades that I will not take, and I just take the ones that I know are going to work. And trading is really, a lot of people are going to disagree with me. Trading is not really difficult. Okay, it's the mental aspect that's difficult. 90% of that is mental. So if you have a difficult time trading, it's basically really that. There's a fear of loss. There's you haven't gone over your strategies enough. You haven't studied enough. If you're having a difficult time in your trading and you're looking at your chart and you can't see what's going on, it's really because you haven't done your homework. You haven't studied enough. You haven't learned price action techniques enough to know where the trades are, because it's not difficult. You have just a handful of candlestick patterns that work, and it's not a lot. Okay, you just have to memorize a few, and you're fine. You have support and resistance. You have candlestick patterns. You have false breaks. You have hammers, inside bars, railroad tracks, tweezer tops, tweezer bottoms, inside. So if you can remember those and see those at previous support and resistance levels and take those trades within, if the trend, for example, if the market's in a downtrend, then you start looking for those candlestick patterns at resistance levels like here. Here the market broke support or resistance levels, so we're in an uptrend. But if you start experimenting, or if you start getting in when the market takes off in the direction without any clue why, then you're going to have a very short trading career in Forex. There's specific rules you need to adhere to when you trade, and risk reward is one thing, and buying or selling at recent support resistance levels is a good rule. So there's just all these rules that you need to follow and remember. A lot of it is remembering it, because sometimes we forget and we make a mistake. So I use these tools to help me, guide me. I use this color-coded support and resistance level to tell me, okay, we're in a support level. There's no sellers coming into the market. And the candlestick patterns are telling me, yes, there's too many wicks down here. Then this should be an exhaustion level, and I should be looking to buy. And then I look at the higher time frames to confirm what I'm seeing on the 1 hour chart, and then I take a trade, I put a proper stop loss, and then leave it alone. Okay? I hope that was helpful there.
There's we have a lot of questions, Roberto, about the indicator. A lot of people are saying I recognize the Tom DeMark lines. Some people are saying I recognize the support or the supply and demand zones and all that.
Yeah.
But you mentioned that you're going to get, when people sign up for the trading room, you'll give them that template, right?
Right. You'll receive the template, and also you're not on your own. I'm there for you. So oftentimes someone will email me and say, what about this trade? What about this pair? Then we analyze it. We pull it up and say, okay, what do we see here? And, oh, it's a great setup. Let's take it. Or, no, stay away from this pair. So we'll analyze that chart. Okay, you're never on your own in the trade room. We're there. We're always looking for trade setups. It's very dynamic trade room. It's not just a call out where, okay, let's get in this trade, put your stop loss, there's your profit, I'll see you guys in a couple of hours. It's not like that. We're looking at a trade. We're seeing, okay, what's going on here? This trade looks great. Let's look at the daily chart. Let's look at the 4 hour chart. Let's see if this is a trade. Has it broken a Tom DeMark trend line? Is it hitting a previous support resistance level? So we look, generally I will not take a trade until I see 3 or 4 reasons to get in the trade. And we go over that. Okay, and then we have our news events, and you know, there's just so much, but there are gaps in between in the trade room. The trade room is open for 3 hours, but during that 3 hours, maybe just there's an hour of tradable activity, or there's a news event, or we're just waiting and the market's just consolidating, and then we just end up, you know what, there's no trades, let's just come back tomorrow. So it changes every day. Okay.
A lot of people are asking about the pound yen trade. Some people are saying, you know, do you use a trailing stop, or do you have a profit target? Are you worried about the resistance level coming up? Lots of people wondering about that.
No, I don't worry. What I do is that if okay, the market started down here. It's already put in 120 pips. Yes, it's hitting a resistance level. My stop loss is I've got about 15 pip stop loss on this, so I'll capture at least 100 pips off this trade. If it hits my stop loss, that's fine. Doesn't matter. I'm not concerned about profit targets anymore. What I'm concerned about is entries, protecting my equity. If I make 10 pips off that trade or make 300 pips, it really doesn't matter. And the reason why is because we trade so much. Okay, we're not relying on one trade to make or break us. We trade so many pairs so many times that if we only make 15 pips off the pound yen, we made 75 pips off Aussie dollar, and we made 100 pips off the Aussie yen. So it doesn't matter. So we think differently in the trade room. Okay, we're not relying on one trade, on one pair. I'm not thinking about, well, what if it hits my stop loss? What about my target? It doesn't matter to me. I've got a 15 pip trailing stop loss. If it hits it, fine. If not, then I'll find another trade if this doesn't continue to go up. So that's how the trade room is. That's how my trading style is. It's very dynamic. It's always looking for trade setups, and it's a different way of trading, and you'll get used to it. It takes a few months to really understand, feel it, but there's so many trade setups all the time. Okay, and they always appear on the 1 hour chart. Now I can trade off the smaller time frames, but it's too chaotic for me. I don't want to be trading 100 times a day. On the 1 hour chart, we can trade 10, 15 times a day, several pairs, and do really well. I think it was Stephen who made 275 pips in one day, I believe, Stephen, which is awesome to be able to do that in a trade room in one day.
Absolutely, yeah. We have a lot of other questions. One of the things that Brendan is asking is about when you use your, like when you're gonna do that news trade coming up, perhaps there is a question from Brendan about your feed. Do you just use the normal Forex Factory feed, or do you use a faster one like a Reuters feed, or what? How do you do that?
No, because our entries are after the initial spike, there's no urgency to get those numbers right away, and as long as they come in at a minute or two before, for example, if we do trade, for example, the pound yen, then we trade off the 5-minute chart, and we wait for an initial spike. For example, let's say that this was a news event right here. The news came out. It was pound yen positive. This is the news. This is a 5-minute candle. This is the initial spike, right? Then what we do is wait for a pullback. We draw a fib from the bottom to the top of that candle, that 5-minute spike, and then we get in as we're assuming that the trade release is very, very pound yen. It's positive. So we wait for a retracement and we enter, and when our stop loss is below the swing point down here. That's how we trade the news. Okay. Always look for a retracement and trade it. Like that. So it's called 3 W's. Wait for the retrace, you wait for the spike, you wait for the retracement, and then you wait to get in. at a fib level, like here. Okay. Oftentimes, the market, the news event, is so strong that they may not be a retracement. So what we do, again, let's say that here, this was the initial spike. So we draw a horizontal line, top and bottom, and we draw a fib from the top to the bottom. And if it doesn't retrace, then we trade at the break of that 5-minute candle, like here, and sell. Okay. And typically, 40 or 50 pips on a news event, and again, it depends on the currency pair. Some is more than others. 50 pips, 40 pips is generally the target I look for on a news event, unless the news is so strong and it's going in the direction of the trend, and I probably would just put a break-even stop loss and stay in for the rest of the day. But if you can capture 50 pips on a news event, that's a lot. Now, non-farm payroll, the larger high-impact news events, that could be different. Okay, that's it.
Mark's got another question. He says, Roberto, I noticed that the vertical trend lines on your daily chart appear at the beginning of each month. When you switch to the hourly, it looks like they automatically adjust to separate the beginning of each day. That would be really handy to notice daily, weekly price patterns. How did you set
Yes,
that up?
depending on the time frame, you'll see different resistance and support levels. So if you were trading a daily chart, then you would see that there were resistance levels up here, and you would be looking to sell the pound yen. Now, you don't want to be just trading based on that resistance on this. You need price action. So we have a color change candle. We've got exhaustion at these levels. You can do a few things. You can draw a trend line, and broke the trend line, and it broke below. Usually when it breaks below or above these levels, and that's a good entry, okay, because it's obviously not breaking above. If it breaks above, then you would be buying because it's breaking that resistance level, or if it breaks below that green support level, then you would be selling if it closed below this. So it's just a nice guide to use. It's great. It's very useful tool, and I don't have to draw trend lines anymore. I don't have to draw horizontal lines to figure out where the support resistance levels there, because they're drawn for me. And the wider the gap, the stronger the resistance or support. Okay.
There's a question here from David. He asks, does it minimize the risk by diversifying over multiple yen pairs? So perhaps if one loses, they all don't lose.
Well, it's why I trade. It just depends. When I look at all the yen pairs, they all have to be going in the same direction. They all have to mirror each other for me to even consider taking a trade, because the yen is being sold across the board or bought across the board, and you'll see it. If you need to line up all your yen pairs, and you'll see that they're all going in the same direction. Now, some may just give you 20, 30, 40 pips, and the pound yen and euro yen will probably give you a lot more. Generally, I mean, historically, average-wise, because they move more. But you're still in profit, and that's what I look for, is all these pairs going in the same direction. Now, what's happening with the Canadian yen, because we have Canadian news coming out, then they're starting, like here, it's starting to retrace, you see? We have news coming out of Canada, so this move, and this is another thing, and I'll bring out. The market, this was Forex Friday, market moved up 63 pips, but because we have news coming out of Canada, all the longs are exiting their positions, okay? Everyone's getting out of this trade and going in the direction of the higher time frames. It has broken a trend line, so we're in a downtrend, but the day is not over. It may recover down at these levels and turn around and go north. But because we have news released, no one's interested in staying in this pair north right now. So they're exiting these long positions, getting out. But you don't see that happening on Australian yen, and you don't really see it happening on the pound yen. Just on the Canadian and New Zealand yen is just consolidating right now. So we need to be consider what's happening in any news event. Another thing, and this would happen at the G20 meeting, knowing that the markets, there's some news events coming maybe in a day or so, and the market has been strong, very strong upward or downward movement, let's say. If there's a news event that's coming up in a day or so, you're going to see the market retrace. No one wants to be in that trade when there's some news event, high impact news event coming up. So we also look at that. We pay attention to that. And it really helps to know that if the market was selling off for 3 or 4 days, but then there's a high impact news event, guess what's going to happen? All those short positions are going to be exited and the market's going to go up. So we look at several different things when we're trading. Okay, that's it.
Al says that he tested the color change method, Roberto, on the euro yen and the Aussie dollar for 2012. The euro yen yielded 73% and the Aussie yielded 74%. I believe he's probably talking about the win rate. Yeah, but I'm not sure.
Right.
Yeah. So he's very happy with that color change method, which I think you mentioned was sort of your bread and butter in the trade room.
Right, and the thing is, you probably would have had a higher success rate if you didn't do a back test, because many of those trade setups, if you would know how to do the 1-hour scalp system correctly, a lot of those you would not even take because they wouldn't qualify. But doing back testing, they don't really tell you which ones actually work, because one thing, the market has to move at least, depending on the pair again, at least I would say 100 pips in one direction before I would take a color change candle. It has to hit a previous support or resistance level before I would even take that trade. So it would definitely increase if you would do it live over a period of time. There's just certain trades color change candles you do not take. But I think that's difficult to program, doing that back testing.
Right. And
okay.
Brendan says the supply and demand indicator, my understanding is that price, volume, and time are what we have to work with. I don't know that you have volume unless you get it from your broker.
I don't need volume.
Yeah.
Okay. All I need is price action and support and resistance level, and the times of day are what's important, and that's when, sure, you can throw up a volume indicator, but I know what times of day when the markets are active, the beginning and in the end of each session. That's where you see a large volume. I don't want to have a lot of indicators on my chart. Price action, the candlestick patterns, the support and resistance indicator is enough to tell me where the market is going to go. In between sessions, you shouldn't be trading because there's no volume. 2 o'clock in the afternoon on a Wednesday afternoon, there's no market. So the beginning and the end of the New York session, the beginning and the end of any session is when you see the market move. Okay, so and you know that if you've been trading for years, you understand where those sweet spots are because you've seen it so many times. And here, look at the sweet spots beginning of Asian session, boom, the market turns around and goes north-south from here. Okay, so we're looking at this. We're looking at these setups, at these areas. The candles also is a volume indicator. Long, big shadows, that's a volume indicator also. So, and if they appear at previous support resistance level, here we have a color change candle. 2 green candles followed by a red candle at a previous resistance level. So I don't really need a lot of indicators to tell me that the market from here is going to turn around if it prints 8 pips lower. And it went down 192 pips. This is a 4-hour chart. So you can use the hourly scalp system on any time frame. On the higher time frame, they work great. Okay, you can make a lot of pips on a 4-hour chart. But I don't qualify this trade unless it's hitting a previous resistance, and these support resistance color supply and demand colors really help me determining if this is a valid trade. Yes, it's hitting a previous resistance level. It is in that blue zone, and we have two green candles followed by red candles. I'm taking this trade if it prints 8 pips lower, and there was the reaction to that trade. Okay. Any more questions?
Yeah, FX Greek is saying news events. This is what I'm talking about. How does the loans? How does the lone trader gauge the strength of a news event?
It has to have a surprise number. We have to have a surprising number, one way or the other. It has to be very negative or very positive, because no one wants to be in a trade going in the opposite direction of a tsunami. If we have retail sales that are outstanding in Canada, no one's going to want to be selling the Canadian dollar. All the short positions are going to be exiting, and the bulls are going to take over. So for that time frame, whether it's an hour or 2 hours, there's a lot of pips to be made. But it depends on that release. The numbers have to come out. And we have about 10 minutes before that release, so we can just wrap this up and see what the release is. If we get a surprise number, we may have a trade. We're going to trade the Canadian yen and USD. I forget what the other pair that I wanted to use. I'll pull it up in a second. But yes, it has to be a surprise number. Otherwise, that's why a lot of people don't trade the news. They don't recommend trading the news because they don't know how to trade the news. You have to have some real serious numbers come out for the market to move in one way or the other. And that's it. Otherwise, stay out of the market. Just wait. Just look for another pair. If we don't get a tradable release, then we don't trade it. Okay. But it would be silly to just not trade the news because it's too volatile or it's too dangerous. You just have to learn how to trade it. And then it doesn't become dangerous. It becomes your friend. It's fun to trade because you know what to do. Okay. Oftentimes traders, they lose so much money trading news only because they don't know how to trade it. You have to learn how to trade the news. And it takes some time because it's completely different than trading any other way. You have to understand how the market moves during a news event and how to trade it. And then you have to pick a pair that has a tight spread. You don't want to be trading a pair that has a 10-pip, 5-pip spread or anything more than a 4-pip spread. Usually I'd stay away from. Okay.
There is a question here about if you missed your entry, would you still get in on the 3 candle? I'm not sure.
If I missed my entry,
I guess
great question.
I guess it's like you're talking about a color change setup.
Right. No, that's a great, and that happens often to me. It just depends. Let's say that I missed this one, and then I look. Okay, how many pips has it moved from the entry? 57 pips. It's too late. If it's only 10 pips, then yeah, I probably would get in. But on the hourly scalp system, you're only looking to make 40 or 50 pips. And it's already made its move, and it's hitting a previous resistance level, so why would you get in on a trade when there's a possibility of a lot of orders up here unless it can break this level of resistance? Yeah, you don't want to take this trade. If you missed it by 10 pips, then yeah, I would probably take the trade. And it's why I always come back at the top of the hour, because that's when the market actually moves. So this candle printed, I come back at the top of the hour, and I wait for this candle here to print 8 pips or higher, and then I take the trade, put my stop loss below here, get out at a previous resistance level, and I'm done. Okay? It's all about getting in at the resistance to support, and here you get in at the resistance, and you exit at the support. Okay.
So where would you
So I
drop?
have time for just a few more questions, and
Okay. Okay.
go ahead.
So there's a question here from Robert. He's saying, I don't really know, if he can't get really tight spreads, should he be worried about taking these types of trades, or? And I think you just mentioned that you're okay with a 4 or 5 pip spread on these trades. Is that right? Or
Yeah. Okay. We're talking about news event, or we're talking about the 1-hour scalp system,
I think
or
Robert's,
both.
I think Robert's talking about. He says spreads concern me because I don't have a special account with tighter spreads. Is there a particular broker I should look into for spreads of a scalping trading room? I think Robert. I think these trades actually go a little bit further than you think. I mean, most of Roberto's trades aren't like 10 pip trades, right? Am I right, Roberto?
Oh no, a lot of the trades are 50, 60, 100 pip moves.
Yeah. So a 5 pip spread isn't going to be that big of a deal on a 50 pip move. Exactly.
No, it's not, and I'll tell you because I trade several pairs that have 5 pip spreads, and yes, I mean I stay in those trades till I'm at least in profit. But I mean there's some pairs that are ridiculous, at like 10 pip spreads. It's like, why would you want to trade a pair that has a 10 pip spread? It makes no sense. So I would definitely shop around and look for a broker that has, offers, 1, 2 pip spreads, 3 the max, 4. I don't like 4 pip spreads, but if you're trading several different pairs, then it doesn't matter. Just look for a pair that has a lower pip spread, and just be careful on your entries of what pairs you trade. You'll be fine. It's just it's a it's not that hard. Just find those pairs and stick to those pairs that have lower spreads, and look for these trade setups that we use: color change candle, buying at support resistance, Forex Friday. We have a turnaround Tuesday. We have false breaks, and oftentimes the trade setups are not on the 1-hour chart. Often they're off the 4-hour and daily chart. So it's not just. I'm not focusing just on the 1-hour scalp system. And actually, I started developing that because I got tired of waiting for a trade setup off the daily and the 4-hour chart, and I saw all these moves on the 1-hour chart. So I decided to say, okay, you know what? I'm going to be trading off the smaller time frames while I'm waiting for that huge setup. Okay, so I can make easily 100 pips a day on a 1-hour scalping setup, and then I see that trade setup on the daily, and then, okay, let me take this trade setup and stay in for a couple of days. But I needed to trade every day because that's my personality. I want to be trading every day. I like the action, the dynamics of the market, and I like finding these setups, and it's fun. And it's only really a 2 or 3 window opportunity in each session, so it's either you wait for a setup for 2 or 3 days, or you take that trade, and maybe even if you make 20 or 30 pips that day, that's better than just staying on the sidelines and waiting for a setup. Okay. Okay, the markets, the news event is coming out in about 2 minutes, so I'd be happy to take questions after, so I'm just going to focus on this right now and just wait for the release. And let's see, 1 second. There were 2 pairs that I was focusing on. Canadian yen was one of them, and the other one was, 1 second. Pound Canadian dollar and Canadian yen. That was what I was looking for. Pound Canadian. So let's look at pound Canadian. Okay. This is actually a very good Forex Friday trade that I didn't even look at. And then we also have a nice inverted head and shoulders pattern on the 1-hour chart. So these, we're just going to switch gears here and just focus on these two pairs. Actually, I'm going to throw up the USD Canadian pair also. So we'll have 3. So this is what we do in Newsroom. I just put up the charts that I'm going to be trading for the news event. And it may be just for half an hour, but during that half an hour, this is what we're going to do. Well, looks like the yen is starting to sell off pre-news event, so that gives us a clue maybe as to the news event. Very interesting. So it looks like this could be the news event that was very negative coming up, pre-news release. So let's see what that number is, and if anyone can tell me what that news release is, but I have a feeling that it's very negative for the Canadian dollar.
Did you get the number, Roberto?
No, I didn't. Can you tell me?
Yeah, it's 0.1 and then negative 0.9 retail sales.
All right, so this is negative. So we're going to be definitely selling the Canadian dollar. Okay, it's hit a deviation. So let's see if we actually get a retracement. This is a 5-minute chart, and we're going to see if we get some sort of retracement in the next 15 minutes. So it's definitely a Canadian dollar sell. Okay, guys? So look to sell the Canadian dollar. Just want to see a little bit of retracement in the next 10 or 15 minutes. Those are very negative numbers. Well, one of them was very negative. The other one was negative but not as strong. So I'm sorry, was this for retail sales or CPI?
What I'm getting from these guys is they're saying that the retail sales was negative 0.9, so the CPI would have been 0.1. Yeah.
Okay, so it exceeded our deviation, so this is a definite sell. Okay.
Yeah, Mike says
0.9.
Yeah, Mike says it's negative 0.9 retail sales and negative 0.1 CPI.
This is awesome. So we're going to wait for the retracement and get in on this trade. Okay. It's a tradable release. Oftentimes I'm afraid that when I do a webinar, we don't get a tradable release on these news events, and it's almost like a waste of time because nothing happened. It's like showing up for a concert and nobody plays. So we just wait for that retracement. Now the other technique is this was the initial spike. It actually broke. So guys, you should really enter this trade because it broke the 5-minute candle. If there is a retracement, then it's okay. It should just continue to go north. It's not going to. If there is a retracement, it won't be much. So it has broken the initial spike. I'm entering on all of these pairs going north. The only one is that I'm waiting for this Canadian yen pair. I actually don't want to trade a Canadian yen yet. I'd like to see it retrace. But the pound Canadian dollar, yes. And US Canadian dollar, yes. North on those. Okay, I'm in those trades, so if anyone wants to ask questions, no problem. Be happy to answer.
Are there any questions? We've got a lot of people talking about the news. What's the best stop loss on each of them? Asked JW.
Okay, let's look at a stop loss. Okay. We have to do a swing point. So on a 1-hour chart, here's a pullback. This is good. It's starting to pull back. The swing point needs to be below the spike. So it's on pound Canadian. It's about a 30 pip stop loss. So look at your 5-minute candle and look for the initial spike, and then put a stop loss below that spike. Now what I would do is draw a fib from the bottom to the top, and these would be entries down here. The market is starting to retrace, so we're going to be looking to enter again down here. It has broken that 5-minute candle, but it's starting to retrace, so I'm going to be looking for entries down these levels down here around 156.15 on the pound Canadian dollar. So let me write that in. 156.15 area. If it happens to go down there, if it does retrace. Now remember that this is 8:30 and we still have the initial opening of New York session in 1 hour. Oftentimes when a news release comes out at 8:30, you'll see the market, it won't surge. It will spike up and then just move around, but then it really takes off during the New York session. So just remember that when you're trading a news release, that oftentimes you have to wait for the New York session to open before you see the market really take off. And many times what it does, it'll retrace. There's an initial spike, a lot of people taking profit at that initial spike, and you see the market sort of like tail off and then find support, and then you see at 9:30, wow, it'll take off. And these numbers are extreme. Okay, this is extremely negative for the Canadian economy. So we should see the market continue to go north on these pairs.
So Mike wants to know, what about a stop loss on the dollar CAD?
I'm sorry, you broke off on which pair?
Mike Butcher was asking about a stop loss on the dollar CAD pair. On
the dollar CAD, let's pull it up. Here it is. I think dollar CAD. Here's the initial spike, and I would put my stop loss below the swing low here, which is about, let me see how many pips that is. It's about 30 pips also. Okay, it's the initial spike, and I drew a fib from the swing low to the swing high. Let's see if it comes back down to these levels. Okay. Here is Canadian yen. It's going in the direction of the trend of the higher time frames. Here's the stop loss above 91.45. Okay. Very good trade. I really enjoy trading in the news because it's fun. I make money trading the news. You just have to make sure. A lot of people will trade the news and not realize that unless you have a surprise number, stay away from the news. Okay. No one is interested in buying the Canadian dollar right now because of this. Keep that in mind. No one's interested. Any retracement is a buying opportunity. So on the pound Canadian, the stop loss is below 156. On US CAD, the stop loss is below, oh, 1 second, it's below 102. So I'll just go ahead and put stop losses here. And there it goes. And we're getting a nice retracement on the pound Canadian dollar. That's good. I love seeing the retracement because then it gives us an opportunity to get in at a better price.
So there's a question, Roberto. Robert is wondering, so you got in at market and you're going to get it on a retracement as well?
Yes, I got in I got in when it broke the initial spike. But if it comes back down to these levels, I'm going to enter again. Because the technique, if it breaks the initial spike, technically that's a trade. But it's starting to retrace, so I'm going to be looking to get in down here and down here, and on this pair up here. I didn't take all three. I just took one trade set up, one pair, and then I'm just going to wait for the retracement and take the others. So I didn't place trades on all of them. I just took one trade because it did break the initial spike. It is retracing and just waiting for. Now the thing is, my stop loss is minimal. Okay, it's anywhere from 30 or 40 pips stop loss, which is not a lot. Okay, so what I'm going to do is just mute my mic, and then when price hits around 61% retracement level, I'll just call out the trade. So we have U.S. Canadian pair starting to retrace. We have pound Canadian pair, and we have Canadian yen. Okay.
So Colin's saying that the revisions are +3 and plus 0.3 and plus 0.2.
Revisions are +0 on retail sales?
Colin, is that right? Yeah, Colin is saying revisions are plus 0.3 for November. For November. Yeah, this is not December.
Oh, okay.
Yeah, he's talking about
You
past.
scared me there for a second because
Me too. Yeah.
so this is the boring part of the trade room where we actually have to wait for a trade setup, and there's always gaps. So you're just going to have to get used to. It's as if you were trading on your own. So we'll see.
Robert has a great question. How many trading days are in the recorded archives in the members area? I think there's dozens. I mean, we've gone for a couple months, right? Yeah.
Yeah, there's several.
Yeah, there's weeks and weeks, Robert, in there.
And also, if you want to check the stats, they're on my website. I keep a log on all the trades.
All your trades, yeah. Please go over again what our homework should be to be less worrisome traders.
Okay, well, there's several things you can do. Pick one strategy, one of the, well, candlestick patterns are the core of trading. So become an expert in candlesticks, number one. Go back in history and start looking for, look when the market really takes off in one direction and see where it started, and you'll see why. Using candlestick patterns, using previous support resistance levels. When you're analyzing the market, you get up in the morning and you're ready to trade, do your top-down analysis. First look at your daily chart, then look at your 4-hour chart and 1-hour chart, and see if they're all in sync. The daily and the 4-hour chart, the market flow is down or up, and if they are, then it's not difficult to trade. If the markets are trending on the 4-hour and daily chart, then you should do well. If you just do your top-down analysis, don't go to a chart and just look at a pair and just look at today's activity. You need enough data to really make an intelligent decision on trading. You need to be looking at least 2 weeks of activity if you're trading off the 1-hour chart. If you're trading off the daily chart, you need to be looking at least 6 months of activity. Very important to understand that. You need that much data. If you're looking, oftentimes I would get a lot of snapshots of trade setups, and they would just show 1 day of activity or 2 days. Not enough. You need to be looking at several days of activity in order to really know where the market is going. That's the first thing you do, and that's a lot right there. That's a lot of information.
Brian Gibbons has a great question, Roberto. He says, Roberto, what do you really love about trading besides making money?
I like being right. I like that I've taken something that I've really worked hard for so many years, and finally I'm a success at it, and it's something that I know how to do and I can do well, and that I can transfer and I can show others. And I'd like that I can not only make money, but that I can help other people make money. That's a lot of fun. Okay, that I can teach this one to someone, and just seeing them excited, someone that has just been losing for years and years, have never been able to profit in Forex, and all of a sudden they're making money. That's a lot of fun. It's really enjoyable. And the fact is that it's all I need to do is devote a few hours a day, and I have a lot of free time. So normally on Fridays, I'll close shop early, and I have a long weekend. And also the fact that I can trade from anywhere. I just have my laptop, have a 17-inch screen, and I can just, and oftentimes I'm at an airport and I'm looking at the markets and placing a trade, or I'm at the beach somewhere, and I'm often doing that. It's just, for me, it's a lot of fun. It's just, I like the activity. I had a friend that plays a lot of video games, and I said, you have to learn how to trade. If you're spending so much time on the computer, you're not making any money trading video games. So he learned how to trade, and he's doing really well. So if I'm going to be sitting in front of the screen, it would be good to make money instead of just surfing the net or doing something else. But I think most of all is that I like that the freedom. There's a lot of freedom in this career in trading Forex that I would definitely not have with a regular job. And I'm sure a lot of people can relate to that. Okay, we're looking for entries now. Buying U.S. Canadian pair. We're looking to buy pound Canadian at these levels. 156.20 is a buy. It's hit 61% retracement level. That's a buy, and the stop loss is below is 55.90. Buy USD Canadian pair, and that's more like a 30-pip stop loss. And I'm waiting for the Canadian yen to just settle down here. I'm not sure where to enter this trade because, for one thing, it's Forex Friday, and the Canadian yen has been selling all week. It's been selling off all week, so I'm not sure where to get in, what to do with this trade, but it should sell off and then retrace from Sunday to Monday. So I'm short again pound Canadian dollar. I'm long pound Canadian dollar again. And now I took another trade on USD Canadian, going long.
Robert says, what's going on throughout the rest of the day, trading day, Roberto, during the last few hours of the New York session? Are you still trading during those times?
It just depends. If I reach my goal, I just don't trade. I just walk away. If I can make 100, 200 pips a day, then I'm done. I don't trade. So it just depends. It's different every day. But generally on Friday, if I can make, and I've already made enough on Friday to walk away. I've done the Forex Friday on the yen pairs, made money on that. And now we're trading the news event, and then let's see, it's still early in the day. It's only 9 o'clock, so by 10 o'clock, 10 a.m., we're done. So, and this trade will probably keep going through 11, 12 noon. This trade will probably completely keep going for the next few hours.
Carl says, Roberto, does not the pullback at lower fibs indicate strength? I think you're long the pound CAD and the dollar CAD, right?
I'm long pound CAD and the dollar CAD. I'm long on these pairs.
Yeah. Robert says it feels like 3 hours during the open of the New York and Asian sessions is not a lot. I guess he's saying it doesn't seem like you're trading for a lot of time if you're only trading 3 hours during New York and 3 hours during Asia?
Well, there's only a window of opportunity and during those times. And keep in mind, I'm not trading 3 hours. The trade room is open for 3 hours. So I'm just trading maybe a small window, maybe it's a half hour, or I'll enter a trade at the opening of the New York session and come back at 10 o'clock. I'll put in a stop loss limit order and then come back at 10 and see what's going on. Oftentimes we get out of the trades, or we just stay in, the trade room closes and we just stay in the trade and just make sure we have our stop losses in, and that's it. But no, the trade room will stay open and you'll be able to log on and see the charts, but I'm not going to be there 3 hours straight. At 7 o'clock we'll do the analysis. You'll see the clipboard on the left-hand side. You'll see the trades, any announcements, the times, and then I come back, and then I just make an announcement, guys, we're in this trade. I'll come back in an hour and see where we are. Or I'll say, okay, there's no trades right now. Let's wait till the New York session and see if we have a trade set up. Oftentimes we'll get out of the trades we were in from the Asian session. That sometimes happens that we'll take a trade in the Asian session and say, wow, we should, like here, with this notice, Forex Friday, buy all yen crosses. I had posted this when we took the trade during the Asian session here on the pound yen. We took the trade here when the Asian session took off. This is when this relates. This notice here on the clipboard refers to this time period, and we took the trade, and I also told everyone, says, look, if you're not comfortable trading Forex Friday yet, please open a demo and place a trade on all yen crosses, and don't get out to the end of the New York session. And so we did that also. So let's see. Just remember, Aussie yen and Euro yen are really good buys. So guys, buy at any pullback. Any pullback on the yen on the Aussie dollar, this should continue to go up next week on those pairs. So let's see, I'm up 11 pips on one and break even on the other. So I've got 2 positions on pound Canadian, and I'm actually going to take I'm going to short CAD yen right now and put my stop loss above the swing high. That's a little tight, but that's okay. If I get taken out, I'm not worried. And we bought USD Canadian pair. So those are the 3 trade setups for the news event. If you take all 3, I would suggest capturing 20 pips each. You'll make 60 pips and you're done for the day. Or if you're brave enough to stay in through the New York session, then you can do that too. Just remember where the stop losses are, and you should be okay.
So
But
when do you move your
notice that the markets...
Sorry.
Go ahead.
When do you move your stop loss to break even? Ermelinda is asking about that.
If I'm up 40 or 50 pips, well, there's 2 different things. If I take all 3 trades, if I'm up 20 pips on each, then I probably would just exit because I've made 60 pips for a news event, which is my goal, to make 50 to 60 pips. However, if the market really surges, then I probably will put a stop loss that will give me at least 20 pips on each pair and leave it alone. It just depends. Sometimes the markets, the thing is, the markets are not officially open in New York, and they will be in about a half an hour. You should see the market really take off in about half hour from now. That's why we see this, a lot of this going on, because New York session hasn't opened yet, just a news release. So we should see the market really take off very soon. Okay. And you have to remember there's one session closing and another one opening, so the Euro session is closing, so there's a lot of profit taking going on, a lot of volatility, and then by 9:30, 10 o'clock, it's just the New York session, and we should see clarity. You should see the market take a direction and stay that way for the rest of the New York session. And these are the things we go over. As what I'm saying is that you learn this. We're not just placing trades. We're learning about what happens throughout the day, every hour, every 4 hours, each session, what happens in the opening of the New York session. When I first started trading Forex, I had a very difficult time trading in New York sessions because it was so volatile, not realizing that there's one session closing and another one opening, and there's a lot of squaring off positions, and there's a lot of traders entering the market, a lot of volume, a lot of volatility, and it was chaotic. And I had to learn what was going on in the markets using these techniques, support and resistance, knowing if the market has already done its daily range from the London session to the New York, to maybe stay out of the market because there's no room, and then start looking for retracements. So I had to learn all of this. So I didn't know what was going on, and oftentimes, I would just have a losing New York session. So, but I'm glad that I know what's going on now, so it's a lot easier. Okay, there we go. We've got these trades. We're going north, going south on Canadian yen. I hope some of you were able to take some of these trades.
Few people are asking, Roberto, if what do you expect to get out of these trades?
Just because I've taken all three. You mean pip-wise? At least 20 or 30 pips off of each one, and if I can make 100 pips, then I'm done for the day.
Yeah, I think they're not really specifically asking about targets, because you mentioned you just want to let it run, yeah, so they're wondering about pips.
Right. Well, depending on how many pairs you're trading, I traded all three. So if I can manage to get 30 pips off of each one, and that would be substantial. That's 100 pips in one day, almost 100 pips. And that's our goal. We're trying to make 100 pips a day, 500 pips a week. And oftentimes we exceed that. But every trading day is different. Different players come into the market. Markets consolidate most of the time, and then they take off. So it's very difficult to tell. That's why we trade all these different techniques, and so we can maximize profit instead of just waiting for a breakout, for example, and only trade breakouts. Well, if you only waited for a breakout, you wouldn't be placing too many trades because the markets don't break out all the time. Okay, so we look for these shorter trades, support and resistance, color change candle, news events.
And I think JW might have missed it. He's asking why you wanted to go long those Aussie pairs. Basically, you're just saying that the Aussie pairs are starting to go up now, so you expect them to go up for at least a few days.
We had positive news event coming out of Australia. That's why it's going to be a retracement because the market's already put in its daily range. 131 pips for the day on Aussie yen. So we buy on retracements. Aussie dollar. Let's see, Aussie dollar starting to retrace. So we're going to start looking to buy the Aussie dollar at these levels down here because it's already it's so exhausted. It's 113 pips, which is a lot for the Aussie dollar. So we're going to start looking for buying opportunities down here somewhere.
There's still more questions coming in about the take profit, but I don't think you actually have a take profit, right, Roberto?
Well, for each of these, when I'm a minimum of 20 pips for each. If you're trading all three, a minimum of 20 pips. But if this thing keeps going as it is, and I'm just going to at least capture 20 pips on each pair, and just let it ride for the rest of the day. The numbers are just so strong. See this? It exceeded our deviation. We were looking for minus 0.4. We got minus 0.9. That's a huge difference. Okay? And it's reflected in the reaction in the market. You see that? This is what we're looking for. This is what makes news events fun to trade. If we didn't get this number, if the numbers came in line as forecast, or that was maybe a slight change but not much, then this would have not happened. Okay, so keep this in mind when you trade the news next time. And you will receive the trading strategy a day before the news event. You will receive this, and you'll receive a strategy instructions on how to trade this release. Okay.
Hey, Russ. Russ says, where do we sign up for next week's trial? Here's how it works, folks. You guys are already in. Because you're at this webinar, you're going to get reminders for all of next week's free trial sessions. So everybody who's already in the trading room has links to the trading room, and you guys are also going to be in just like you came in tonight. So you don't have to do anything. You'll definitely be in next week if you want to, 7 a.m. New York time, 7 p.m. New York time, Monday through Friday. If you want to get the discount link, this will be available next week, and I've just sent through that right there. So you have that link, and that's a cheaper price than you'll get on the website. So hopefully that helps. Yeah, Linda. No worries, Russ. No worries, Linda.
So you're all in, guys. Don't worry about it. Hamza says he's been in Roberto's trading room now for 3 weeks. Now I care more about my own trades because Roberto's 1-hour scalping strategy is simple and very effective. Excellent. I know Lisa, I think, is in the room as well, and Lisa sent me an email. I think I might have read that one earlier, but yeah, Lisa says it's a really fun way to trade. We don't sit and watch candles all day. We just find our entries at the close of the 1-hour candle, and if there's a setup, we take the trade. If not, we come back later. Yeah, pretty simple stuff. I don't know how long you want to wait around, Roberto. We've been here a couple hours, and I know, you know.
Oh, I'm so sorry.
No, I mean, I don't know. I mean,
no, we should definitely close, and I'm going to, I'm up on all of these, and what I'm going to do is just put a stop loss, and at least like on this trade, I got in twice, but I'm up. I'm just going to put a stop loss, break-even stop loss, and I'm just going to let this ride for the rest of the day because the numbers were ridiculously negative. So thanks. I mean, yeah, that's it. I got caught up in looking at how much money we were making here. So, but yes, you know, please join the trade room. It's a lot of fun. You'll make a lot of money and make some new friends maybe, and I'd be happy to have you there. So, and next week is all free, so it's
yeah,
it's great.
Yeah, so there you go, folks. Okay, so Brent, Robert, I don't understand what you mean by we are already in the trade room if we're at the webinar. What I mean by that, Robert, is that just the way you received an email to remind you to come to this webinar tonight, you are going to receive emails all next week, whether you like it or not. And the emails are going to remind you that you've got a webinar. It will have the same name as this webinar, you know, Roberto's Trade Room, come in the back door or whatever. So this is like a webinar series is basically what I mean. So just like you received an email to come to this session, you will receive one before Monday's session at 7 a.m. New York time, before the 7 p.m. New York time one on Monday, and on Tuesday, and on Wednesday, and Thursday, and Friday. So everybody here, if you choose, can attend any or all of those sessions. After that, if you want access to the members area with the archives, the indicators, all that stuff that Roberto has, the webinars he's done in there, that will be part of the charge. And for that, it's $397, I think, for the first 2 months, and then after the first 2 months, so $397 gets you for 60 days, right? After 60 days, it's only $79 a month for as long as you want. And if you at a certain stage you understand everything and you've got it under control, then that's great, right? I think Roberto's trades are just totally taking off right now. That's awesome. Yeah. Oh, this is great. So if you guys took these trades, I reckon everyone's up at least 100 pips if you're in all three trades, right? Yeah.
Yeah, I think I'm up 140 pips, and
Yeah.
so I'm just going to put a tight stop loss, and I'll capture at least 100 pips, and that's fine. You know, the markets will retrace probably in about, maybe they won't retrace. If they do retrace, it will happen in the next 15 minutes, and then there's just more buying opportunities. So I've locked in my profits, and I'm good. And hope to see everyone in the trade room.
Yeah.
On Monday night or Monday.
Next Monday. You will. The first one will be 7 a.m. Monday, right? New York time. Yeah.
Right, 7 a.m. Monday.
Yeah. Cool. And hey, there's a lot of thank yous here, Roberto. Charles says this is the most money I've made in years. That's awesome. That's awesome. And then everyone say, you know, FX Greek, you'll see me there. You'll see me there, Mike. Mike Butcher says Russ is going to be there. Rashida is going to be there. Thanks, Roberto, says Charles. Robert L. is going to be there. My trading buddy can join next week, says Nelson Lance. We'll have to send him a link, Nelson. Let me send you that link right now. But he can come. He's got to use this link right here. It's the link that you used tonight, Nelson. So here it is. Let me send it to you. Okay. It is that link right there. I think is. Oops. It's the link that you use to get. It's the link that you use to get to this webinar, Nelson, and it's right here. There you go. That's for your trading buddy. Okay. All right. Thanks, Manu. I'm glad you like it, Rashida. Okay. Mike. I'm in for sure, says Manu. Tons of fun, says Bruce. You'll see me for sure, says FX Greek. Bye. Okay. All right. Thanks so much, Roberto. Really appreciate it.
Thank you. Thanks, everyone, for attending, and hope to see everyone on Monday.
All right. See you guys next week. Take care, everyone. Bye.